Let's go to the Nasdaq. Checking in with Max Cabasso, Managing Director of the Market Intelligence Desk at the Nasdaq. Max, I know you were watching the change to the indexes at the Russell. What stood out to you? What do you think folks should know?
Yeah, so look, it's a big event. Obviously, the 2,000, 3,000 adjustments got announced on Friday evening. This year in particular, the 2,000 is going to get a bit more of a redistribution because of the outsized moves we had seen this year, basically with MicroStrategy and Supermicro. They're going to be moving up to the 1,000. So those weights are going to get redistributed down to the 2,000. So again, it's a huge trade. It's very important for a lot of these companies, and the index ARBs love it. So you see a lot of action over the next few weeks. The trade actually taking place on June 28th, but over the next few weeks, you're going to see a bit more momentum behind some of these names. They're getting an upweighting or being added to the index that haven't been there in the past. So again, a lot of volatility potentially, but a lot of liquidity and action in them.
From Supermicro to Dell, I mean, there's a lot of like AI connected stuff that's shifting around, sort of like the NVIDIA Kingmaker trade is going to show up when all these companies, get uplisted, basically.
Yeah, those again, Supermicro in particular was huge. Their weighting was really outsized in the 2000, so they had a huge impact there. So again, them getting moved up to that 1,000, a lot of those AI tied names getting moved up to the 1,000, it brings a lot more weight back to some of the smaller companies that had a bit of a downgrade previously because of how big some of the large ones got in the 2000. So again, a bit more extra, a bit extra to get boosted to some of those smaller companies now that really got a bit left behind over the past 6 to 12 months.
Speaking of left behind, the small caps Russell 2000 as our benchmark has been the weakest link in markets now for a couple of years. To what extent do you think this kind of adds on to that? I mean, when you get the good companies graduating out, the small cap quality seems like still pretty low in terms of what's in the Russell too.
Yeah, they've definitely been left behind. They're still below 52-week highs we saw at the end of last year. Still a decent amount below their all-time highs where everybody else has kind of hit it. Nasdaq again today hit new all-time highs. So bit left behind. They're a lot more rate sensitive. So you're starting to see a bit less volatility in those names though recently. Again, with the Fed cuts essentially, we're going from 6 to 2 potentially. So we're seeing a bit less volatility there. Companies in that space are getting more comfortable with the current environment. We've seen them kind of rolling over debt short term. Now they're a bit more comfortable to go in long term, operating in the current environment, not waiting for rates to fall too much lower. So again, they're starting to get their footing. We think there's potentially some upside there. Again, just to try to close that gap, between the potentially S&P and the Russell. That underperformance has been there for a while. I've been kind of waiting for that to pick up, and this potentially is one of those moves that, again, with rates volatility starting to dampen down, they might have a bit more of a tailwind there.
If the operating word there, we got some action in bonds going the other way today. Treasury selling off. Inflation Friday. You guys monitoring rates as a disturbance in the market yet, or should we be able to get through this print okay?
I think we're probably going to get through the print okay. We've tended to see that, off the initial prints, whether it's CPI, PCE, you see kind of a quick tick as the algos get involved, and then it's kind of calmer after, more level-headed. Again, it's more wait and see at this point. We went from expected 6 rate cuts before the year started down to 2, and the markets are still at all-time highs essentially. So that volatility is kind of gone. There's still some, obviously, if weaker economic data comes out, less so than the inflation prints, that might have a bigger impact on kind of the Fed's thinking at this point. So some of these interim prints, we seem to see a bit less volatility. So again, bonds haven't been as impactful as they were, call it 6 months ago.
True. Okay. All right. Thanks for the catch up, Max, and a good look at what's changing on the index level. Appreciate that. Max Cabasso joining us from the Nasdaq. All right, so we got a month until the changes, but what's coming. So we'll see if there's a little arbitrage trade in some of the AI winners that are going to get uplisted in the Russell indexes.